All righty, Jonathan. I have not told you what topic number three is, but it just came to me based on our discussion on number two. And that is actually there are two things going on right now that actually deserve more attention and actually will lead to lower prices or values in commercial property. And those two things are commercial lending has all but dried up as the regional banks kind of pull back. If you can't get a loan, that's a problem. And then second, we kind of hit it in video number one today, raising equity is going to prove much, much harder. And this just means that the capacity to pay is going to be lower. So if you are a seller, whether that's a distressed seller or you've come up on your time horizon or whatever, uh, it's going to feel pretty rough the next couple of years. This is not going to be quick. This is going to be a couple of years in the making. So what do you think about lending? And what do you think about raising equity in the next couple of years?
Yeah, I mean, listen, it's always the case, right? I mean, when it's the best time to buy, it's always the hardest time to buy, right? I guess that makes sense, right? Because if it was easy to raise money, it would be easy to buy and you wouldn't have that problem. But yeah, it's going to be tough to raise money, whether it's from LPs or from banks. I mean, I'm actually going through this right now. I have a new hotel deal in the works, which is frankly a smoking deal, but I've got to find the debt for it. And we're kind of working through that. And I've been talking with my mortgage broker, and they're basically demanding so much more information up front. Things that used to be due diligence items, so that after you got the term sheet, then you'd have to provide all this information to the bank. Now, my mortgage broker is basically saying, no, we need it all now, like in order to get a term sheet, right? So
wow,
it's proving a little bit. It's frustrating because, like I said, the deal is freaking smoking. But we'll get it done, but it may be harder to kind of like get it done, right? And I think a lot of people are going to be experiencing the same thing, where it's just it's just harder to raise money because people have gotten burnt. And I think the people who will find it easy to raise money are the people, or easier to raise money, are the people who have a great track record, are not involved in any stupid deals where they've lost money for their investors, and have proven themselves over time. I think the people who are going to be out of business for good are the ones who got in, at the end, had no experience, and lost people's money, and basically their investors' only experience with them is losing money, right? And
yeah, I think it's really going to boil down to, I think the next 2 years will be framed as good operators. I think the last 2 years were framed as marketing, social media influence, and financial engineering,
yeah,
which are all the reasons I ran away. I'm like, I'm not putting a penny in any of that stuff, and frankly sold a couple in 19. So, I look forward to what's coming. I'm on, it's again, as we said in video number two, I believe this will be bigger than '08 for this segment of the market. And
yeah,
and again, dude, the pain is we're not even in the first inning yet. We're like warming up. The game hasn't even started. So the pain, it's not going to be fun. But again, I
yeah,
think lending, people are missing out. I always tell people in residential real estate, because that's my audience, right? There's a housing market and there's a lending market,
yeah,
and they don't always line up. And even in
absolutely.
residential, it's getting harder to get done. They're raising the fees. They're increasing LTVs for investors, but it's the same thing in commercial. And there's going to be, you said it, I think in video number two, when LPs lose money and you burn $100 million in a year, that spreads fast.
Yeah, yeah.
And that's going to make raising private equity or equity harder.
Yeah, I
Going
mean, if you
forward.
think about how many people must have been in that deal, right? That Houston deal. And then how
I
many
mean,
people,
you got to guess. I have never, $100 million. What do you think the average contribution was? 100 grand? I mean, I'm just
God,
guessing.
probably, yeah, probably somewhere between 100 and 250, I would bet. Maybe a couple of big check writers in there, but they probably had an army of capital raisers.
Yeah.
And look, here's another thing that we haven't even talked about, but people are going to be looking for somebody to blame for
Oh, there's
this.
going to be lawsuits. Crazy.
And I guarantee you there's going to be some smart plaintiffs lawyers out there looking for what the syndicators did wrong, whether it was, raising money the wrong way, or whether it was, believe me, those OMs are going to be fly-specked by these attorneys looking for something that was left out, right?
Yeah.
Because
And
they're
the
going to
OM is an offering
the offering
memorandum.
memorandum.
Yeah.
Yeah. I mean, there are going to be people are, because people are there's so much talk about, you know, the structures to raise money that get past the SEC scrutiny and stuff like that, that people forget entirely that there's a whole other SEC issue, which is securities fraud, right? Where which is a whole lot worse than, like, frankly, than just raising money the wrong way. Like, if you get caught having left something out of your OM, or if you lied about something, you can be in a world of hurt. And because you're talking about not just rescission, which is, you have to give the investors their money back, which is a big enough problem because the money is
Money's
now,
gone.
the money's gone, right? And now
Yeah.
you owe the investors their money back for rescission, and you don't have the money because the money it's been foreclosed on. There's that, but there's also, if you get caught in a securities fraud issue, now you're looking at punitive damages on top, right?
Wow.
So I if I
It's going to
were,
be messy. It's going to get
yeah,
messy.
I think there's going to be some people who are not in a good way.
Yeah.
So, and it's just going to ripple through the whole industry, right? I mean, like we said a number of times now, people who got burned are not going to want to do this again. They're going to tell their friends, "Oh, don't do that." That's, you're going to hear people are going to be talking about how this is all a scam.
Yeah.
Real estate syndication is all a scam.
It's funny how you bring this up, because I remember for a decade, don't buy real estate. It doesn't work. Don't buy houses. It always goes down.
Yeah.
Right. My next door neighbor's mailman's dog walker. Now you're going to have it
Yeah.
in syndication. Yeah. It's going to be wild. But again, I want to spin this around. This is a good thing if you were a patient investor,
Yeah.
stacking cash on the sidelines. You didn't get caught up in this stupidity. I'm ecstatic for what's coming, because I told everybody this was coming, and we're ready. And Olivia and I just do deals ourselves, but
Well,
there's so many people going to be hurt.
I mean, listen, I used to get into these arguments with people before inflation got out of hand, right? About, people saying, like, you either don't sell, or if you sell, you have to do 1031 no matter what, right? And
No.
you've got to have the money working. You can't be in cash because inflation, which at the time was under 2%, is going to destroy your cash, right? You can destroy your savings. And I would say to them, look, you are much better off, like, at 2% inflation, losing 6% by having your cash in the bank over 3 years than by losing 20 or 30% on your deal that you bought at the top of the market before the crash. Plus, you have the opportunity cost. So if you sell and you put the money in the bank and you pay the tax and you have inflation, you're still better off, because then you're buying at a big discount when nobody else can buy. And people just were like telling me I was stupid, right? And here we are, right? Here we are at that moment where that greed and that kind of, like paranoia about mild inflation, right? And frankly, even with the strong inflation we've had over the last couple of years, the time has been so compressed, right, that still made sense to sell, take your lumps with taxes, and then get in at the bottom of the market.
Cash is an opportunity on the future.
Cash is an opportunity. Cash is an option on opportunity, right? So, and that's what people just would argue with me about. No, you have to be fully invested. You have to be fully
What do you think those LPs that put $100 million in that deal, don't you think they wish they had cash now?
Oh yeah. I mean, seriously, they wish they had sold and just pay their taxes, pay their capital.
Yeah, and again, it's funny you bring this up, because I've shared this before, but probably not in a year or two. The 2 apartments that I sold in 19, one I 1031 because I had an easy exchange into a portfolio of houses. Yeah. The other one, I just paid the taxes. I'm like, I'm not getting into a deal just to get a deal. I'll pay my taxes. There's no shame in paying taxes on profit.
Exactly. Because you're only paying it on the profit, right? You're not paying it on the whole deal. And so again, having that nest egg to be able to invest when you have these big opportunities. I mean, when you look at the people like, Seth Klarman or, you know, Warren Buffett or Sam Zell, whatever, those guys got to be the way they are by buying distressed stuff, right?
The original grave dancer,
that's
Sam
right.
Zell.
And you can only do that if you've got the cash, right?
Exactly.
So Sam Zell was not trying to we talked about this in 2019. We talked about Sam Zell specifically and about how he was sitting on how many of her billions of cash. He obviously paid the taxes on that.
Oh, exactly.
Right.
He
right?
was okay paying of course he did.
Yeah. He paid his capital gains tax so that he could have that money in the bank for times like this. And I bet you Sam Zell, you know, he's probably, you know, hurting somewhat because he's heavily invested in office. On the other hand, he saw something bad coming.
Oh yeah, he's fine.
And was selling right before the run up and before the crowd. And he wasn't buying in 21, 22 when everybody was going crazy buying, right?
Yeah, he was just interviewed and somebody asked him basically, I'll get the quote wrong, but Sam, are you ready to buy now? And he basically chuckled. He's like, you guys think the deals are here now? This is nothing. I am looking, yes, but I don't plan to buy probably for a year.
Yeah.
I'm like, exactly, Sam. You are a legend.
I mean, Sam Zell is probably still alive just because he can't die before he gets a chance to like take advantage. That's right. Take advantage of this opportunity. Right. I mean, that's probably all that's keeping him alive at this point, you know.
It's just so exciting.
So, yeah.
Well, I look forward to coming to your event next week. I think it is perfect timing. I'm so glad Olivia and I will be there together, meet with the One Rental at a Time fans, but more importantly, sit in the audience and just absorb, because I want to be ready. I want to be ready for what's coming late Q4, all of 2024, maybe 2025. More and more people in the commercial space now have a saying, I don't know if you heard it, but survive to 25.
Yeah.
You know, that's something that's coming. But yeah, I look forward to being bigger on the other side of this. And Jonathan, where can people find you?
Yeah, so please come and join me at the Apartment Investors Club Facebook group where we can talk about this online. I've also got a podcast called the Apartment Investors Club, so easy enough to find. And you can always come to my website, which is also Apartment Investors Club, and get my free download there.
Awesome. Thank you so much.
Thank you.